Joining us is Ramathibela-Smith, who is our ANN7 business editor. Thanks so much for joining us, Clive. Can you just make sense of all the numbers coming into the...
That's it, that's where we
How's
start.
the JSE performing and other indices?
Look, it's been a very difficult day for the JSE today. I think the most important thing to remember here is that we saw the rand actually strengthen, so that sort of helps some of the resources sector to actually stabilize a little bit. I think that was up by nearly 0.5%, which is quite welcome as well. So all the other things other than that were really struggling to pick up today, and it started in the Asian markets. Earlier hours in the morning, we saw the Hang Seng looking very weak, and that obviously has to do with the dovish comments that were made by the Federal Reserve Bank in the United States, Ms. Janet Yellen, the most powerful woman in the world, I think, by far. So the decision by the Fed will have an impact on what happens at the end of September. The question is, will they hike or will it not? It's a question of, do you hike or not to hike?
That's the question.
That's the question. So, I mean, so if they do hike, obviously, then that means that they're still in target with regards to what they started at the beginning of the year. They were aiming for 4 rate hikes this year. They've only done 1. So they can have one now and they can have a second one again in December if they want to do that. But the jobs numbers did not support that. And that is why a lot of people are still very jittery. No, they don't know whether or not they're actually going to be doing the hike or not. So that's why investors are very nervous to actually commit a lot of money into the market.
And of course, we take our cue, like the rest of the world, from what the Federal Reserve does in the US. And how does that impact on us? Well, should it rise?
It should, because we're part of what we call the emerging market space. So when you see the Asian markets that they did today, they were very negative. It's their 6th week that they've been struggling, in actual fact, to break into the positive. So that tells you that there's a lot of tension with regards to where the equity markets should go. And with the gold price also picking up, it tells you that investors are actually going into gold as a safe haven to find some comfort. And so the monies that would normally go into what we call the gambling world of equities does not go there anymore. People are protecting their capital, taking short decisions so they make sure that they protect their capital, so that obviously at the later stage then you can start looking at whether the Fed does raise rates or not. If they don't, then there'll be more opportunity for people to put more money into the market.
All right, Clive, please stick around as we reflect on the story of the day. Now, retail trade sales have increased by 0.8% year-on-year in July 2016. Statistics South Africa data shows the highest positive growth recorded were in the pharmaceuticals and medical goods, cosmetics and toiletries, up by 6.3%. Textiles, clothing, footwear and leather goods grew by 4.3%, and the main retail contributors were in textiles, clothing, footwear and leather goods, contributing 0.8%, and seasonally adjusted retail trade sales slowed by 0.4% month-on-month in July 2016. This followed month-on-month changes of under or minus 1.9% in June 2016 and 2.9% in May this year. And the 3 months ending July 2016, seasonally adjusted retail trade increased by 0.5% compared to the previous 3 months. And we continue with our business editor, Clive Ramathibela-Smith. Is this an indication that there is pressure on the disposable income on consumers, in that in previous fiscal or financial years, we had seen larger numbers coming out from the retail sector?
Well, on a year-on-year basis, we're not surprised, because obviously you would take in the last quarter of last year into consideration. So we're looking at July to July. So if you take that into consideration, you know, they say, "Get deep December, boss," and people go out there and they spend. And unfortunately, this time around, people did not spend as much as they normally do. In actual fact, if you look at the underlying companies, they didn't do relatively well. We saw the numbers, we saw the results with the retail giants such as the Mr. Price of this world. They didn't do well. People are not buying clothes anymore. That's why you see my clothes are already starting to...
You recycle,
yeah,
hand-me-downs. Yeah.
So it's becoming very difficult. Other than that, we're starting to see other retailers who follow suit. For example, Woolies, for example, is not doing relatively well in its own market itself. But in the luxury goods stuff, that has been going well. So the question is, the rich are getting richer and the poor are getting poorer? And maybe that's a question we'll have to look at. But that's certainly a sign that there's a problem there.
And how does the dependency on credit impact on the retail data?
I always say, you know, our middle class is built on credit. So that's the biggest problem that we have in this country. And that's why when interest rates go up, the consumer feels the pressure. And if tax, for example, goes up, the consumer feels the pressure. We don't have a stabilized, strong consumer who can suck up when there's increments. So when the increments go up, we demand salaries to increase rather higher than what even inflation is, because other inflationary measures, which are not calculated into our CPI, also add to that, like the likes of food inflation, for example, which is spiraling out of control. So this particular number, the 0.8% retail number, is an indication that yesterday when we spoke about the productivity, how is this linked now with that? It's linked because it means people don't have enough disposable income, like you're saying. So that means that we're not importing more because there's not demand. And so on the ground, even our local retailers are struggling a little bit to sell the same goods that they would normally sell at a higher price, or maybe not. And over and above that, we had an even stronger rand, which would have made it actually easier for us to import. But we didn't do that. We didn't take advantage of that. So that shows you that the consumer is under considerable amount of pressure.
Yeah, and profit obviously would be under strain when it comes to the retail sector. Those with store cards will know that if you're not able to service your debt, it then operationally impacts on that. I've got one, which I'm going to close at the end of the month. If you have to know, I owe them 359 rand.
And
to be precise.
And is that private call that comes in. Like,
I know,
right?
I know.
It's the consumer under pressure, and it's understandable. I just wish our consumers would be educated enough so that they can go and talk to their creditors before things go out of control, rather than wait for them to be called.
But I'm just saying, if people are not able to meet their monthly obligations to the big retail stores, it would impact obviously on their bottom line.
Yeah, you're absolutely correct. And even the bonds, the housing bonds, the mortgage, that becomes more expensive. We saw the rates go up earlier this year. People are living with, I want to call it a tight belt, but at the same time, I know that some people don't even have a belt.
Yeah,
So
exactly. You just have to do a stomach in. Okay, so now, Clive, textiles, we know that sector has been under pressure, especially with the competition, the muscle that China, India, and those other sectors are doing. Are we likely to see an improvement in this as a multiplier of employment, the agro-processing that President was talking about, that can enable greater absorption of people in that sector?
I think it's part of the 9-point plan, isn't
Correct.
it? So the textile industry in South Africa has got a very rich history. Unfortunately, we've lost thousands and thousands of jobs because there's another way people are making money and making sure those clothes are there. There's not a market in South Africa for textile. The reason being that China has produced textile at a much cheaper, less than a quarter of what you would get in South Africa. So it's actually cheaper for people to import from China clothing than to have it developed and designed here locally in the local market. And so that is the reason why you're seeing the textile industry under pressure. And I talk about this because in Durban in particular, which is our hub of the textile industry, that on its own has depreciated by almost 33% over the last 6 years. So that tells you that there's a serious concern that the Chinese market, bombarding people with additional clothing at nearly a quarter of a price, is creating a little bit of a problem.
So there isn't even a room for the local market to innovate and to try and position itself in a favorable way to the local market. It is about the price at the end of the day.
Yeah, it is about the price, but you have to create the demand. So what happens is, if the retail stores were selling stuff that was made here locally in South Africa, then you've created a demand. So when you create a demand, then you can actually have a price that you tag to that demand. If that price is competitive and there's policies within government to say you're not allowed to buy in China if this is the amount of volume that you're buying, you can only buy locally at a discount, that will influence textile companies to actually buy locally as opposed to going outside of the country. So that's the strategy that you would want to adapt to make sure that you create the demand that is required locally so that you can create jobs and actually have a running textile industry.
Yeah. So this is the man that knows everything before it makes headlines. Clive Ramathibela-Smith, our business editor, with the latest market update and also reflecting on the retail sales.